Is inflation a quiet form of theft? Does it feel like your dollar is purchasing less and less by the day? Is the economic data even making sense? And is the steady erosion of your purchasing power putting your retirement at risk? More importantly, what can we do about it? How can investments in scarce assets like gold and silver or decentralized assets like Bitcoin be used to counterbalance this constant erosion of our savings and purchasing power? If you think you may be falling behind, see the link in the video description to access the free Inflation Retirement Calculator to make sure that you are on track. To discuss why gold works, why fiat currencies ultimately fail, and why gold and other scarce assets act as an insurance policy against risk, we will hear from economist and expert Mike Maloney, economist, White House advisor, and author Jim Rickards, economist and investor Keith Weiner, and macro analyst and investor Lyn Alden.
I think the overall challenge right now is that the inflation we're seeing now is fiscal-driven inflation. If you look back over time at the inflationary periods and the sources of money creation, they can be very different. And so the 70s, that was a demographics bulge, and so you had a lot of credit creation, a lot of bank lending-driven money supply growth. That was actually bigger than the deficits we were running at the time. Whereas the 1940s, for example, that inflationary period was because of tons of money printing for the war. And so far, what we've seen in the 2020s is the second type. We've seen very fiscal-driven inflation, not excessive bank lending. But the Federal Reserve's tools are exclusively designed to deal with either trying to accelerate bank lending or slow down bank lending, as well as things like control the wealth effect and things like that. They're not really designed at all to deal with fiscal-driven inflation. The best they can do with fiscal-driven inflation is try to slow down private sector stuff so that it offsets the fiscal side.
The dollar is a debt instrument. It's they call it a note. The Federal Reserve note is what it says on the dollar bill. Both note and bill are old terms for credit, but it's not redeemable, which means you can't take your marbles and go home. And that's a really important feature that's missing. By taking that out, they disenfranchise the savers. So in the gold standard, if you don't like the interest rate, you withdraw your gold coin. You say, well, it's not worth it. But in the case of the dollar, you can't do that. And so the dollar has two fatal flaws coming from this. And the first one is the rate of interest is completely unhinged. And in the gold standard, it's remarkably stable. The second one is that there is no extinguisher of debt. We pay debts using dollars, but the dollar is itself an IOU. If you pay a debt using an IOU, you simply shift the debt around, and so the debt necessarily must grow exponentially. And if you look at any kind of exponential trends you find in physics or in biology, thermonuclear explosion is one, disease vectors being another, electrical amplifiers being one. Exponential trends grow until they cannot, and then they collapse spectacularly. They don't just sort of fade away. They blow up and go thermonuclear. And so that's what's happening on the dollar. The debt necessarily must go up exponentially. It is doing so. And that is obviously not sustainable. And when that finally ends, woe unto us who will have to try to live through that.
And what's really interesting, if you study history, there comes a time where the public, the mass psyche of the country and the world, starts to sense the currency debasement. Everybody should be able to feel it now. You go to the grocery store, you go to the gas station, you can feel there's a currency debasement going on. Everything's costing more. Your currency is losing purchasing power. And as the public starts to wake up, gold and silver go through the roof, and they automatically revalue themselves when the public wakes up, and they catch up to all the currency that's been produced.
Just a quick interruption to say thank you for supporting our channel. Please like and subscribe if you enjoy this video content. It really does make a difference. Also, a quick mention and shout out to one of our sponsors, Birch Gold Group. With over 3 decades in the industry, Birch Gold Group is one of the most trusted companies for gold investing. Whether you are starting a brand new gold IRA or rolling over an existing account, the company will make this process seamless and stress-free. With endorsements from respected and renowned voices across America and one of the lowest investment minimums in the gold IRA industry, Birch Gold Group makes it easy to get started investing in precious metals. To find out more about Birch Gold Group and how this trusted gold investment company can help safeguard your coveted retirement savings, see the link in the video description to visit Birch Gold's official site to receive a free gold investing guide. Also, check out our video review of Birch Gold Group by clicking the link in the top right. Now, back to the episode.
The challenge is that they're also blowing out the fiscal deficit with higher interest expense, which in the 70s didn't matter because we had 30% debt to GDP, but now that we have 120% debt to GDP, it becomes weird because the effect from, the inflationary effect from those larger deficits from the higher interest expense can actually offset some of the slowdown you get in the private sector from trying to squeeze those. So I think since then we've been stuck in this limbo with central bank tightening. We're starting to see some of that disinflationary pressures, and I think a lot of people assume that once that goes down, it's just behind us now. Whereas I think an issue is that inflation is ready to return should, for example, the Fed eventually pivot or get dovish in some way. Basically, that as long as the supply side's unaddressed, it's ready to come right back.
If you can understand how currency is created, how you have been monetized, that every dollar in existence is an IOU, YOU. I owe you your future work hours that you're going to use to pay taxes on the principal and interest on the bonds that the Federal Reserve bought by conjuring currency into existence. Our lives are threatened by a bunch of people that think they know more about how we should live our own lives than we do. If we didn't have the central banks, it would be an entirely different world today. The financial sector wouldn't be such a large percentage of the economy, and banking would be doing its fundamental job where it is an actual service of the economy. It would be honest banking if we had honest money instead of dishonest currency. Gold and silver are honest money. We're not just talking about sound money, we're talking about honest money because there's no fraud and theft involved.
It's a little bit like fire insurance on your house. You don't want your house to burn down, but heaven forbid if it does, you're sure glad you have the insurance. And when you write that premium check to the insurance company every month, you don't think you're throwing your money away, you think you're doing a smart thing. So get some gold, it's volatile, don't get too upset with the day-to-day price action. But institutional allocations are about 1.5%. So I'm recommending 10, so there's a long way to go there. People need to get a lot more gold.
The first great bull market was 1971 to 1980. It lasted 9 years and gold went up 2,200%. The second great bull market was from 1999 to 2011. Gold went up at just a little under 700%.
The 5,000-year history, gold is the one asset that has outlasted numerous business cycles, economic downturns, booms and busts, stock market bubbles, and the rise and fall of every currency. And unlike depreciating, faith-based fiat currency, gold is no one's liability. It builds wealth while preserving it. Owning physical gold and precious metals requires responsible sourcing of grades, purity, condition, the best prices, transparency, and most of all, security and storage. Gold IRAs are a tax-deferred means of owning physical gold and ensuring all these investing principles are met. We have reviewed and vetted the best gold IRA companies that meet all these requirements. See the link in the video description to access the free gold investment guides. If you enjoyed this video content, be sure to like and subscribe so you don't miss our next video. If you have $100K of retirement savings to protect and want to take advantage of the best gold prices, see the link in the video description to sign up for the free Gold and Silver Web Conference hosted by Augusta Precious Metals. Thank you for watching.